Let's start with the main question. Why is right now the best time to enter crypto? Because the market is quiet, activity is minimal, volumes are weak, and most people are tired of waiting and have simply left. And this is where the most interesting part begins. Market history always works the same way. When there is silence around and everyone is speaking calmly, it's not the end. It's the entry point. Money is made precisely at such moments, not when every second person is shouting about growth. Right now, the key economic players are changing their priorities. Inflation is clearly slowing down. The personal consumption expenditures index rose by only 2.6%, and core inflation has fallen below 2%. Price pressure is easing. The Federal Reserve has effectively announced the end of the tightening cycle and is preparing to ease policy. At the same time, leading indicators of the U.S. economy are declining, and the largest banks are increasingly talking about the risk of a slowdown or even a recession. Investors are already pricing in around 100 basis points of rate cuts by the end of next year. All these signals point to a shift in monetary policy, and cheaper money has traditionally fueled growth in risk assets. Cryptocurrency has repeatedly responded to such macroeconomic changes with rapid rallies. Since the last bottom in 2021, the price has already increased more than fivefold. If the current cycle follows the historical trend, Bitcoin could rise to around $200,000. Remember, the strongest surge begins not at the peak, but at the bottom, when nothing is clear to anyone. And that is exactly where we are right now. After the latest wave of Bitcoin's decline, which you can see on the chart now, what I would call a collective depression began in the market. Many analysts and crypto media outlets are literally competing in gloomy headlines. We are told that the era of cryptocurrencies is over, that liquidity is gone, that the market lacks the fuel to hold above key levels, let alone set new all-time highs. Overall, the message is one and the same. There will be no explosive growth anymore. Neither Bitcoin nor other cryptocurrencies have any chance of rising. And if you've been watching the market for a long time, you've probably noticed one interesting pattern. Analyst sentiment almost always completely depends on the phase of the market. When Bitcoin and major altcoins are actively rising, absolute euphoria reigns in the news. Talks begin about $1 million per Bitcoin, $2 million, and so on. But as soon as the market moves into a correction, not even a full crash, just a pause, the rhetoric changes instantly. Panic appears in the analysis. Scenarios of deep declines are discussed, along with claims that the current range is either the final stop before a collapse or a prolonged stagnation for years. In this video, I want to deliberately go against the general sentiment. I want to share my view on the future of Bitcoin and the entire crypto market, because, unlike most major economic publications and commentators, I believe that the current moment may be one of the best entry points in a long time. Opportunities are appearing in the market right now, and you shouldn't miss them the way you did in previous cycles. Moreover, there are several strong reasons to expect Bitcoin to move into a new powerful growth phase. And it is precisely now that the foundation may be being laid for doubling or even tripling investments in the next market cycle. I have 5 key arguments. Let's go through each of them in order. Let's start with the technical picture. Bitcoin hasn't existed for very long. It appeared in 2009, after the global financial crisis and the bankruptcy of Lehman Brothers. Initially, Bitcoin was conceived as an alternative to the traditional banking and financial system. Its history is short, but even in this time we can clearly see the cycles by which the market moves. You often hear a simplified theory: Bitcoin rises, then corrects, then rises again, and corrects again. But if you look closely at the chart, even on the weekly time frame, it becomes clear that the real structure is much more interesting. Historically, corrections have almost always been double. In past years, we repeatedly observed a scenario where the first drop occurs, then a recovery, then a second drop, and only after that does a prolonged uptrend begin, during which all the major players became even richer, while the majority was afraid and followed the media narrative. If you look at market movements in 2018, 2019, and 2020, the picture repeats. We saw the same thing in the most recent cycle. And now, essentially, we have already gone through both phases of correction. First one decline, then a rebound upward, then another decline. After that, according to historical data, Bitcoin usually moves into the next growth wave and begins to consolidate at new levels. That is why the current situation, where the price has been moving sideways for several weeks without going up or down, could very well be that exact point where the correction ends and a new upward move begins. That is the first argument. The second argument is key support levels. If you mark them on the chart, it becomes obvious that Bitcoin is currently in a zone of strong historical support that has been working for more than 2 years. If you go a bit lower, you'll see that these levels previously acted as resistance. Moreover, this was an important psychological level that the market couldn't break through for a long time. Right now, the support zone is roughly in the range of $80,000 to $85,000, and the key psychological resistance is located around $120,000. In the previous growth phase, the market was already able to break the former resistance, while the support remained intact and clearly defined. And it is precisely from this support level that the next wave of growth may now begin, taking Bitcoin into a new phase and to new highs. Why is support so important? Because it shows the prices at which major players are buying. Every time the price approached this range, there was a rebound upward, and now the situation may repeat itself, simply because these levels are attractive for accumulation by investment funds, hedge funds, and other large market participants. And there is one more point that cannot be ignored. When the market really takes off, the question won't be what to buy, but where you even are. Because in moments of real movement, time decides everything. Liquidity, order execution, platform reliability. That's exactly why I use Bybit. It's one of the most liquid crypto exchanges on the market. Traders and investors around the world choose it. Because when a real impulse begins, you need a platform that can handle the load instead of crashing at the most critical moment. On Bybit, you can prepare for the move in advance. Enter the market calmly, build positions, and be ready for those very multiples when the market finally wakes up. You'll find the Bybit link in the video description. By following it, you'll receive welcome bonuses that will make trading easier. The third argument is directly related to this. It's the structure of purchases by major players. This data is publicly available. We can see how the largest funds working with Bitcoin are steadily accumulating the asset, following a long-term strategy. If you look at the end of November and December, it becomes clear that activity surged sharply. Large purchases appeared: 10,000 Bitcoins, 8,000, and more. There hadn't been such activity for quite a long time before that. This is a strong signal. It indicates that current prices are perceived by major players as attractive, and as a rule, it is after such accumulation periods that the market moves into growth. Moreover, we are seeing increased interest from other funds as well, including actively managed funds that try to choose optimal entry points. Tracking the actions of major players is one of the most important elements of market analysis. The fourth argument relates to fundamental factors. Last week in the United States, the key interest rate was cut by 25 basis points. The rate is now at around 3.75%. If you look at the dynamics, you can see that rates have started to decline from peak levels that exceeded 5%. The very fact that a rate-cutting cycle has begun is a huge positive for the crypto market. Historically, the strongest phases of Bitcoin's growth occurred during periods of low or near zero rates. When money is cheap, there is more of it in the economy. People borrow more actively, keep less money in deposits, and invest more often. At low rates, it is practically unprofitable to buy bonds or simply hold cash. Capital starts searching for returns, and it inevitably flows into investment markets, into stocks and cryptocurrencies. We have already seen how rate hikes in 2020 put pressure on the market, and in exactly the same way, we saw how rate cuts in previous cycles became fuel for growth. In 2019 and 2020, rates were being lowered, and that was precisely when Bitcoin showed one of the most powerful rallies in its history. And the fifth, final argument: in addition to rate cuts, the Federal Reserve has begun returning to quantitative easing tools. Simply put, this means the money printer has been turned back on. When the Fed buys assets and effectively creates tens of billions of dollars that flow into the economy, the money supply grows. This is exactly how the economy received additional liquidity in past years. And if you open the Bitcoin chart for 2020 and 2021, you'll see what kind of growth occurred against the backdrop of simultaneous rate cuts and quantitative easing. Now we are seeing a similar situation again. Rates are falling, liquidity is returning, large funds are actively accumulating Bitcoin, and from a technical analysis perspective, the price is sitting at a strong support level. That's why I don't see a single serious reason why you shouldn't buy Bitcoin right now. If we reduce everything to one thought, it will be as simple and blunt as possible. The year 2026 is not about cautious percentages. It's the year of unreal multiples in Bitcoin and cryptocurrencies. Market history has shown this many times. First, silence, then doubts, then a liquidity reversal, and only after that the very growth everyone will talk about in hindsight. When money becomes cheaper, when the economy emerges from contraction, when people start taking risks again, Bitcoin is always the first to explode. Altcoins follow. Fast, aggressively, with no chance for those who waited for confirmation. In 2026, no one will ask why Bitcoin is rising. They will ask something else. Why didn't I buy earlier? And if you're watching this video now, it means you're still at that very point where decisions are made calmly, not on emotions and FOMO. Because multiples in crypto are never made at the peak. They are made before the market wakes up. And the market is just beginning to open its eyes, and you have every chance to be the one standing at the top when it finally takes off.